Hi, I'm Christian Easterday, the CEO and Managing Director of Hot Chili. We are in the enviable position of holding one of the premier developments globally in the copper space, one of the few meaningful large-scale copper projects that is capable of production this decade.
Christian, good to see you. Thanks for joining us. Copper is going on a bit of a tear at the moment. You've been busy, and I want to understand why the copper market is behaving like it is, and then how do you take advantage of it? So first of all, copper getting to $5, quite exciting. Back down to $4.50 though.
Yeah, look, the beginning of any new cycle is often very volatile, and as I've been saying in a couple of interviews, this cycle is a lot different to the last cycle. The last cycle was driven by demand out of China. This cycle is going to be driven by a lack of supply, and that is going to produce quite dramatic volatility in price. We've seen that the copper price lifted some $1.30 within a couple of months, and is also experiencing interesting volatile movements downwards. But this is where really supply squeeze and the realization that there is no copper supply response that is near term or even in the medium term possible. And that is really starting to bite.
Right, and I guess people will want to try and understand the behavior of copper. It's obviously off the back of lithium in 2022, 2023. We saw great highs, and it's come off and remains at great lows at the moment. Will copper behave the same way?
Look, I don't think so. I think that you probably need to look to iron ore, right? Deep metal markets, iron ore, the number one metal market in the world, copper number two, just outstripping gold in the last 4 or 5 years. So deep metal markets are a little bit more mature. We're talking about close to 25 million tons of consumption of the metal globally at the moment. And that's a metal that basically doubles in demand every 20 years. And that's really important to understand. So if we compare it to the lithium commodity cycle, which everyone knows has done great things like iron ore did, has done a 14 times from where it began, but almost come back to where it started. It's a very shallow market. It's something that is maturing. And I imagine as that becomes more mature, that volatility will also calm down. But certainly I think copper is a very mature, very stable metal market with strong fundamentals. So what we're probably about to see, I think you need to draw analogies to what happened to iron ore price at $20 a ton in the early 2000s for what is about to happen next.
Right, and obviously you talk about the size of the copper market, very mature market as well, and that scale is important, but it also suggests, if you say there's a supply problem, the scale of the problem ahead of us.
Yeah, well, look, I was just in Sydney last week at the Sydney Mining Club listening to a couple of my peers present, in particular the new CEO for Sandfire, and he put it a little bit differently, and I hadn't heard that before, but we've had 2.5% CAGR growth underpinning copper demand for quite some time, but we've also had a continuous decline in copper head grade globally. Around about 2.5% decline in head grade comes off every year. Combine that's a 5% increase in supply that is required, or to put it another way, another Escondida, the world's largest copper mine, required every year going forward, and that's pretty startling to some.
It's pretty startling because those mines take a long time to come online. So I think I was at a conference last week on stage with mining legends. They tell me where I think one of the guests, Bob Wares, who I think perhaps even invested in your company, he was just stating that these mines take 15 to 20 years to come online these days. Yes, the grades are dropping, and funding has been a real problem for miners for the last 10, 15 years. So what's the solution?
Yeah, look, I think the solution is very, very significant investment, and it needs to arrive very quickly. And the response from that investment, unfortunately, we've already missed the boat. Even if things were streamlined and governments coordinated to cut green and red tape, Let's even imagine that the supply response is 10 years away. The industry will always respond by the existing mines dropping their head grades. Unfortunately, the news alert's already out on that. We're down to such a low cutoff grade in these mines, often approaching 0.15% copper now, that there is just not a lot of copper left in the tons that when you drop the cutoff grade. So the supply response this time is not likely to come 70% of the supply response coming from just mines dropping head grades. So it is going to look for new supply, and new supply, as you said, unfortunately has very long lead times in front of us, even if we were to see that significant investment. So companies such as Hot Chili are naturally advantaged when we're 14 years into our journey with all of those key permitting hurdles addressed already.
So obviously there are lots of copper companies out there, a lot of exploration, and a lot less development companies, and obviously the producers are struggling to continue to find new copper, new pounds. They're struggling with grades, and they're struggling with the cost environment which they're operating. Now, higher copper prices may solve some of those problems, but ultimately we've got to look to the next generation of producers. You're potentially one of them. What have I got to believe about your ability to say, well, this is a good investment?
Look, I think you've got to look at the conditions at the moment. There's a lot going on in the M&A space, a lot of musical chairs being played between the majors, and that's about the existing book of copper production and who owns what is coming out of the ground now. But ultimately, what the market will start to forward look is about where are the new mines going to come from, and this is where the issue really, really bites. Hot Chili is one of 6 projects outside of the control of the majors in the world that is capable of 100,000 tons per annum of copper production. That's a big issue. We can gather up 30 or 40 different names and make 2 or 3 of those companies out of the small scale space, but literally we are in a very, very tight pool of advanced developers that have survived through the downturn of the last cycle and are actually in a position to advance within the coming 4 or 5 or 6 years into this new cycle. So that is, I think, where the world will start to turn to. This question of buy versus build is really a question about risk and capital intensity. If projects or mining companies such as Anglo are trying to be taken over by BHP at capital intensities plus $40,000 per annualized ton of copper equivalent production, you need to start looking at the developers, where the average at the moment is in the low 20,000s, and then there are the very low risk players like Hot Chili that sit at the bottom end of that spectrum at numbers of around $10,000 per annualized ton of copper. So at a certain point, this buy versus build really starts to push towards the developers. And then you need to look at the space and you need to say, well, of these large scale projects, the majority of them are at high elevation. And where have the bad experiences in the last cycle come from? They've come from high elevation. CapEx blowouts doubling, sometimes tripling, higher operating costs, very bad experience that destroyed a lot of shareholder value in the last cycle and took the majors quite a number of years to delever their books and really fix up some really, really bad outcomes. And so when we look at that pool of new developers, we look at a crowd that is in high altitude, and then we look at the crowd that sits at low elevation. And the experiences down at low elevation, next to infrastructure, next to coast, have been very different from the last cycle and coming into this cycle. You've got to think about the very successful developments of La Verde from Capstone Mining that are going on right now, on track, and really, keeping up with the capital that they estimated from the beginning. And then the Mina Justa is up in Peru, 100,000 ton projects developed by Minsur. These have been good experiences. So low capital intensity, high capital intensity. It's also about high elevation, low elevation, and we're a significant benefactor in that.
Interesting. I mean, you make a good point around the BHP Anglo transaction there, where the I think it's very efficient, but in the sense that big companies are not very good at exploration, but it's also kicking yourself in the foot or your ass. Because it's damaging for the industry as a whole. Because again, where's the money going to come from for all of these whether it be greenfield, brownfield, etc. sites coming through? We need more money into this space, and transactions like that perhaps the self interest is there, but maybe a conversation for another day. It's a very, very frustrating to sort of see the lack of money coming through. And talking of money, you've got a big project in front of you potentially with the size of the capex, and you've got a few options, a few levers available to you. You're going to firm up for us on the numbers. So you've raised some money recently. Congratulations on that. The time couldn't have been more perfect. Tell us what you've got to do and how you're going to allocate that capital through to FID.
Yeah, look, the recent raising was really about the timing in the sector. The copper price moved. The market fundamentals were very clear to our board to now shift gears for the company, to push our foot down on the accelerator pedal across all of our development streams, primarily the copper project, completing the pre-feasibility. We've had this pre-feasibility mostly complete for quite some time, on pause while we were navigating pretty poor equity markets in the world. And so for us to attract a $25 million placement, heavily oversubscribed, done in 24 hours, a share purchase plan of $5 million that was closed after 5 days, 6 hours notice to the market that we were closing early, and then almost another $6 million coming in 6 hours. This was a pretty strong endorsement from our shareholders, a continuation to institutionalize our register, an ability to increase our liquidity into the North American markets, which is where our future lies. But this was a pretty strong endorsement of Hot Chili and the positioning of the company with this very significant asset. So that's given us treasury of around about $37 million after costs. And that gives us the ability to stop looking over our shoulders, to run our own race now, and ensure that Costa Fuego is first in line to project financing of these large-scale projects. We can do that rapidly now, complete the pre-feasibility by the end of the year, and push into the commencement of our bankable feasibility and that all-important final permit, the submission of our environmental impact assessment. That starts a time clock that has this project at the financing table in late 26 or 27. So that's given us the firepower to do that. It's also given us the ability to have some flexibility on growth. We have up to 25,000 meters available to put into the ground, but we're going to be very, very choosy with that. We're entering the final phase of our consolidation at this large coastal land holding called Costa Fuego. And our next steps will be about taking out low-risk growth opportunities and being able to deploy our drilling money into those. But we're also looking outside of the box. We've been a single asset developer for 14 years as we doubled down on the coast, and we're going to take advantage of nearly 16 years of relationships in country that give us, I guess, a first mover advantage on some other opportunities which we're looking into. But for now, look, that money is about pushing us firmly into a development decision on Costa Fuego. But to answer the first part of your question, which is a question that every junior gets and every CEO that's trying to develop a $1 billion or a substantial project and is a fraction of that capital required to build, the mind instantly goes to the large amount of equity side outside of debt that you would be required to put together to finance something of this scale. And obviously being a multiple of the current market capitalization and not having the imagination that share prices can go up, then it looks like a very dilutive exercise to go down. And they often refer to these challenges as unicorn challenges in our industry. But Hot Chili has been developing something pretty special that we've spoken about previously in our journey to secure all of these advanced permitting situations that we have for Costa Fuego. We've secured water rights, not just to develop our project, but which can potentially be utilized for the entire Huasco region to unlock numerous major mining developments. We estimate some 20% of new global copper supply in the coming 15 years sits in one part of the world, and we sit at the actual gate to the port of all of that supply, holding all of the water rights that is possibly will enable all of those projects to actually participate in this new cycle rather than waiting for the next cycle. And that's something that that we're seeing a great amount of interest on, Matt.
Right. Well, but let's get into some numbers here. Remind people, because yes, it's multiples of where you're at the moment, but obviously with the PEA numbers, we've got a sense of what it's all about. Can you just remind us, or remind the viewers, listeners, etc., of some of the numbers, and let's kind of get into how you work your way through that bit.
Yeah. Look, I mean, in the trip I just spent over in Sydney, really marketing water for the first time to some of the local institutions and broker groups over on the East Coast, having regard for the fact that our marketing for the last 3 months, coming off the back of a concept study which we put into the market, has primarily been in the North American markets. So it's something that the Australians were really hearing a little bit more narrative from me for the first time. Which is quite exciting to sort of unveil this, because it is gaining a lot of momentum and quite quickly, from the interactions we're having with potential off-takers to also the interest we're seeing inbound from major tier one global water infrastructure groups. And so what we put out into the market was that we control a maritime concession to extract 4,000 litres per second of water from the coast, to supply our own project with about 700 litres per second of salt water for processing. And that left a substantial amount of additional water, which we were looking at as the opportunity to potentially supply desalinated water to all of those local developers, such as Nueva Union, run by Teck and Newmont, to the deposits even further far field, higher in the Andes. And so what we have is a situation where Hot Chili has the only maritime concession in this part of Chile. It took us 10 years to secure, including the land accesses on the coast. And in the last couple of months, we've submitted a second maritime application, which is now in the system. And that will allow us to extract another 4,000 litres per second of seawater from the coast, but also allow us to discharge hypersalinated brine and therefore upgrade this potential multi-user water network to be able to supply both salt water and desalinated water to this entire region. And that's very, very important, because we're finding ourselves in a monopoly position in this part of Chile, where you are no longer allowed to take water from the ground for new mining developments.
Right. But back to the numbers. That's the potential solution for you in terms of maybe the equity portion of your build, your capex, which is quite attractive, I suspect, to most investors. But can you just remind us of the numbers, because you're not on your own. If people are going to try and replicate what you're doing elsewhere with their projects, they're going to have similar size capex issues. They're going to have similar size environmental, etc. issues. You've come up with a unique way through work you did, I guess, 10 years or so ago with the maritime water concessions that you've got. So can you just give us the numbers, because it's going to indicate some of the problems that people behind you will have, but it also highlights the scale of the opportunity that and the cost base that you've solved potentially with the equity portion of, in terms of the capex with this maritime water concession. Do you mind going through that?
Yeah, look, and people have been trying to wrap their head around what I'm actually trying to say here. And let's be clear, Hot Chili is not contemplating building a multi-billion-dollar water network that we have no experience in building, owning, operating, transferring. Most of these large-scale water networks in Chile are run privately. We will have all of the assets into a private NewCo later this year, as well as a pre-feasibility level business case study complete on what this means to all of those potential off-takers. And so that is what we're investing in. And what that means is that we're effectively preparing this to be monetized for the benefit of our shareholders. And when I say that, people say, well, are you going to put this out into a spin co? Is there going to be a distribution and a new company come out of this that Hot Chili can publicly list? And yes, those are the kind of options that the company has, and we haven't cut off any options. But just simplistically, if we were to just utilize this as a private company, then we could sell down Hot Chili's equity stake, ensuring, of course, that ultimately we don't put the risk of our water supply, we don't provide any risk to that, and that we have water coming to Costa Fuego in 2028, as long as there's no risk to that. And what we have is a subsidiary company that we can sell to a tier one group that can finance, build, and supply water, not just to us as an off-taker, but to all of our neighbouring projects. And wouldn't that be a significant opportunity for all of the large companies that at the moment will not be able to participate in this copper cycle, even if the copper price goes to $5, $6, $7. This permitting process that we have been in is long, and it's something that even if they started today, we imagine that they might be getting their first licenses within 10 years' time. So that is something that becomes very attractive to large infrastructure groups. And actually, I was getting asked this question on Thursday last week by a very large Australian institution that was just trying to say, how much is this worth? If you're going to utilize this to fund the equity side, either partially, but to make a significant impact on your funding ability for your copper project, I'm trying to wrap my head around how much is this worth. And like clockwork, Matt, our friends at Antofagasta Minerals to the north of us with their massive Centinela expansion, adding around 140,000 tonnes of annualized copper production to that upgrade of Centinela, seeing huge amount of investment from their Japanese partners, Morabini, but they have just basically outsourced their water requirements to a consortium of Transelec and Amar Water. They've just sold those water rights for $600 million US. And that has reduced their capex by about $380 million. Now they don't have to build that water infrastructure, but they've given that to a consortium that have paid them a large sum of money for the right to be able to build that expansion and supply water for that long life mining operation. I think you can probably guess how we're thinking about this when people say, but it's just licenses. What are licenses worth? Oh, okay, I get that this is a potentially monopolistic situation, but won't the government just change the rules and water will flow from everyone and everyone will have licenses if they click their fingers? Not our experience, not the process that is undertaken in Chile, and streamlining, even if streamlining was to reduce these timeframes by 40%, which I would find would be very ambitious. We have a monopolistic situation in the near term in the coming 6-7 years to be able to unlock those developments with our water rights. No water, no project.
Well, for you and for everyone, I think is what you're saying. Okay, so again, timing is important. Timing of the recent raise, I think, is smart. We sort of see, copper go on a bit of a tear, slight reset at the moment, but you got that done double quick time. Timing around this water, I guess there's a window of whatever, say the next 10 years or so, where maybe monopolistic is probably not. We shouldn't use that too much, but certainly first mover advantage on that front for the next while, and the way you're suggesting monetizing that to fund the kind of copper build, that's interesting to me. Certainly in terms of a conversation around anti-dilutory fundraising here. Now, just in terms of some of the other things that I guess Chile has seen over the past couple of years, we saw a lot of sort of politicizing of various conversations around mining in the last 2 years, with the constitutional conversation, with elections, etc. But the environmental component does not go away. If anything, it gets tougher. It makes it tougher for you. but tougher for everyone behind you, probably more so. What do you think you need to do this year in terms of that process to enhance your chances of making this a kind of quick process, or quick, as quick as it can be process going forward in terms of your behavior, your allocation of capital, and the things that you need to focus on?
Yeah, look, environmental, social, these are the things that really are the key things you've got to pay attention to. And Matt, there are no shortcuts. There isn't. Hot Chili can throw money at something like that, and we can expedite. This is about really hard graft. This is about reputational build up in an area, becoming a corporate citizen in the area that you operate. This has been 12 years of investment from Hot Chili. That is our shortcut. It's the work we've already put in. And when we talk about environmental, it's the 10 years of seasonal baseline work, of community work that's going on here, and all of the socially responsible things that Hot Chili has been doing. We made a decision not to touch one drop of water from the ground when we went into this area in the exploration phase. And we also went down the path of realizing our ore bodies processed better with salt water, and really that was a fantastic physical attribute of our deposits. But it led us down a pathway to go after these maritime concessions very early on, which now puts us in this really strong commercial position to be talking about how we can fund a large chunk of the equity side out of assets that we control and being able to monetize them. But it's actually bringing the environmental side of things in parallel with Hot Chili. What the government has been really looking at with multi-user water networks to be built in the Atacama, it's about reducing the environmental footprint by having one multi-user network. You don't have 5 desal plants pumping hypersalinated brine into the ocean. You don't have 5 high-altitude pipelines cutting across communities and environmentally sensitive areas. So we found ourselves in a position where we're actually one of the proponents for what the Chilean government is really promoting, for new, sustainable, environmentally, responsible ways of developing regions and multiple projects by sharing infrastructure. And that reduces capital burdens across all of the participants, from reducing their upfront CapExes to being able to bring forward developments, to bring this supply in early, to hopefully part of the global supply response for copper and the electrification of the world, which is all about decarbonizing the world. But this is being done in partnership with the community. What we are contemplating with this water business is actually supplying water to the communities in which we operate. And isn't that a novel idea? It's something that the government on both sides of politics, is really behind. And it's something that Hot Chili just has found itself in the perfect position at the perfect time to be able to, address all of those things and be really, a pin-up project for how you develop these things and how you socially and environmentally do these things responsibly. And so, the word monopoly was not meant to entail that we are going to be the enabler for everything and no one can do anything without Hot Chili's water licenses. We're actively wanting to be the enabler and wanting everyone to also share those environmental and social responsibilities in developing their projects.
Okay, well, look, I think that the other thing that I just want to sort of go through, because you've been very deliberate with some of your phrasing around, certainly low elevation versus high elevation, which is, I think, a concept we've seen a couple of companies maybe get into a little bit of difficulty in terms of market concerns, market narrative around, water up at, up in the hills, shall we say, higher elevation. So for you, why are you making a point of that? What are the advantages to you? Because it feels like if you're nearer towns and populations, maybe there's more problems.
Yeah, look, I think it's about, firstly, if you're going into the high Andes, look, whether you're on the Chilean side of the border or the Argentinian side of the border, no one wants to see high Andean aquifers drained, water fields put in next to glaciers. I don't care which government you're talking to. If you're in Chile, it's not going to happen. If you're in Argentina, it's on the horizon. And I don't think that any company is actually looking at their water solution without investigating desal solutions to provide water into the high Andes. Whether you have a license or not, that's the reality going forward here if these high Andean developments are going to be possible. But what $500, $600, $700 million water pipelines, big $500 million to $1 billion desal plants at this scale, we're talking about large scale copper projects that draw, anywhere from 600 to 1,200 litres per second of water, depending on their scale. These are major infrastructure projects. They're major capital burdens that go onto the front end of those projects, and they're capital burdens that coastal projects, especially coastal projects that don't require fresh water to process, just don't have. And so, it's why we sit with such low capital intensity. We skip $1 billion of capital straight away because of where we are and the nature of our ore bodies not requiring fresh water for processing. So it is a really, really big key differentiator. It's something that I'm quite surprised. The more I talk about this, the more light bulbs are going off about this. And it's something that has not just differentiated us from an economics perspective, but it's about doability, about actually being able to develop a project realistically in reasonable timeframes and not at such high capital intensities. That's not efficient. That's not efficient capital allocation. So low risk projects are generally probably going to get the most attention at the outset of this new copper cycle.
Right, and obviously we talking about advancing the feasibility study and giving us a sense of current pricing environment, current margins, etc. I think at today's prices you're probably up near sort of 30% IRRs. So it's solid. But this allocation of capital for that feasibility study, you're doing a few things. You obviously picked up some extra land on Damaco. I'm
correct. Yes,
I butcher that. Bit more copper, gold copper. You are going to do some drilling to feed into it, and the purpose of that drilling is what type of drilling is it to try and get sort of higher grade or get more?
Yeah,
more of inferred up to indicated. What are you driving at with that?
Yeah, correct. Look, at the moment, the preliminary economic assessment we put out mid last year, we had 16 years mine life on a project capable of producing around 100,000 tonnes per annum of copper and 50,000 ounces of gold. So it's definitely a very meaningful project on scale. But look, we are actively trying to build further mining inventory in our open pits. At the moment, about 70% of our production will be open pit, and the remaining 30% is via a cave operation at Cortadera. We see that a higher copper price environment in the future may well turn all of our inventory into open pit material. However, you never stop enhancing. You never stop generating the highest IRR and the highest NPV until you get to the project financing table. We have some time available. We have growth funds that we've set aside for that, but we are not in the business of chasing exploration targets anymore. We're on the last phase of tidy up in the region, either via consolidation. For instance, in Damaco, we go down 20 kilometers to the south. We have a historical porphyry camp, some 4 or 5 large-scale open pits that were dug down there and locally processed for oxides at grades of anywhere between 0.5 to 1.3% copper, with just the oxide blankets removed. And then all of those pits having the entire sulfide ore bodies exposed at the bottom of the pit and never really drilled. That's a big opportunity for us. That seems like low-hanging fruit. And we're in the final phase of what we're doing, that we feel that paying for upfront ticket prices to be able to assess those on smart option agreements, that, look, we're quite happy to pay option deals if their ore bodies are worth it, but we want the opportunity to assess these things. They're eminently available to be drawn into Costa Fuego to start ballooning our mine life. I imagine our mine life extends just with the copper price going up. We see our copper price assumption on our financials at $3.85 mid last year against consensus price at that time. And now we see 27 bank consensus forecast price today at $4.07 a pound. So we've lifted over 22 cents a pound. Our deposits are very sensitive to cut-off grade and what we're optimizing the deposits are. And I imagine mine life builds as that consensus price goes up and our optimization price goes up. But also, yes, Matt, we're looking for high grade additional feed at the front end. All projects benefit from that, and you never want to stop chasing that. But we're also looking for bulk mine life additions, and an open pit variety is definitely right at the top of our hit list.
Okay, well, to maybe finish off, give us a summary of what we can expect to see from you this year. Obviously, feasibility study on most people's lips. What else?
Yeah, so pre-fees at the end of the year, and our environmental impact assessment ready to go in to the system mid next year. But also on the development front, we have this water business case study, or effectively the same as a pre-feasibility level. That will be out towards the end of the year into a split water company that will be a controlled entity of Hot Chili. And also what we're really focusing on is also some parallel development studies on that port. We signed a port agreement. We're funding 20% of a study to convert an existing berth that's not being used into a bulk concentrate terminal for the entire region, of which we will be one of the first customers with 400,000 tonnes of annual concentrate movement through that port. It's a 1.4 million tonne per annum port that we're studying for it to be upgraded to. And what that does is provide a home for concentrates to be shipped overseas from this area. And that's going to be a significant benefit to also our neighbouring projects. So a lot on the development side in terms of major catalysts coming towards the end of the year, most of them. But in the meantime, I imagine the market is going to see more news flow in relation to a growing level of interest from water off-takers in the area with our water infrastructure, and also a continuation of a very aggressive consolidation strategy in the remaining elements of Costa Fuego that we don't currently own. And perhaps maybe the company might also look at other opportunities within Latin America, which we've had our eyes on for some time. Maybe we might even consider stepping out of the single asset developer class and starting to broaden our growth horizon. So what does all that mean? It means that drilling results, hopefully we'll turn on those drill rigs for those high priority targets when we have them and we're ready to deploy. A lot of work is going on from the geology team on the ground, but we're a company that is not in the business of talking about rock chips, prefacing when we turn drill rigs on, creating expectation before we know what we're going to do. So those things are not as material to Hot Chili. We run our business for long-term decisions and for the long-term benefit of our shareholders. And that large investment that has got us a 1 billion tonne resource play on the coastline, built from nothing, and now sitting here with one of the most advanced permitting situations, that is not via luck. That's via a management group that has had a long-term vision and has stuck at this through an entire copper cycle to now be positioned at the front of a new copper cycle and be, ready to really take advantage of that for our shareholders. Copper price will lift all copper boats, but some that have the biggest exposure, such as Hot Chili, will lift on multiples. And we saw that in iron ore with the likes of FMG.